Hello and good day, everyone. Andy here. Welcome to another analysis of stocks and indices. I would like to talk to you about the indices. Basically, we had a very crazy week, guys. However, good news for some of you is that some of the indices are now turning for a turning point, namely USA, basically Dow Jones, USA 30. As you can see, the as expected and discussed in the previous video, we went for a big sell-off from the 40,000 all the way down to 37,466. That was our pivot point, and now we consolidated and we are now for a retraction. So get ready for next week's. Actually, next week we have crazy load of data coming up. The most important data that's coming up next week is on Thursday, April 25th. The GDP growth rate, which is basically the forecast, is 2.3. Previous closing was reporting was 3.4%, and the consensus is 2.1%. As you know, all eyes are on Federal Reserve, guys, and everybody's waiting to see what's going to happen to the interest rate. So we're going to be monitoring the growth rate in the United States dramatically. The next thing that we are monitoring is the initial jobless claims, which is at 2:30 Europe time, but namely Berlin time. And well, the previous report was 212,000. The consensus would be 210,000, and the forecast would be 213. What you should really know is that if the jobless claims surprise upwards, you're going to see a big bull run because that probably, again, emerges the hopes that the Federal Reserve is going to cut down on the interest rates a little bit sooner. But as you know, that is not the Federal Reserve's major index. Basically, they are waiting for the CPI reading, which is coming up very soon. Now, having said that, I am basically bullish for at least up until the initial jobless claims would be published. I am bullish on Dow Jones, and I am waiting for the Dow Jones to cross over the 38,564 point, after which you have a very good bottom ground. You have a great support line, which, as you can see, it's this support line right here. So it's a major pivot point upwards. However, any lack of confidence in surpassing that point will result on the next sell-off going down, probably testing the absolute lows, and this time targeting for 37,300. The next index that it has found its bottom line, guys, is the NASDAQ US Tech 100. Again, as predicted, and you remember the previous video, we said that we're going to go all the way down. Actually, we exactly hit the 17,300 point, which is a very strong support line right here. And now we're going to consolidate. We tested the 17,544 point. We got rejected. However, of course, next week, after the earnings of Tesla and many other tech companies, we're going to be seeing potential more bullish runs, guys. As far as chart is concerned, we are at a consolidation point. At this point, I do not recommend anybody going into any kind of trade because it's just too risky for a trade for now. However, if you've had short positions, maybe it's now a good time to get rid of your short positions and wait for the numbers to be published and then decide for yourself. Last but not least, we're going to be testing S&P500's basic support line at 5,000 point. That's exactly somewhere around here, guys. This is the highest high, the previous close. And if we can actually keep ourselves over the 5,000 level, S&P 500 has the potential to jump back up again and test the 5,492 level. However, the chart fundamentals are not really in its favor. We are almost close to a crossover in MACD, and we are now basically and technically bearish on the stochastic. So we are going for a correction. The key point is, and the key data that we're watching next week would be the initial jobless claims in order to see if S&P has the enough actually momentum to go for the next rally. Again, gold went for the next basic bull run, as we discussed and we mentioned in the previous video. Look at this beautiful run, guys. Gold is running without steam, as you know, on the back of uncertainty about the war between Israel and Iran and the missiles that the Israelis actually sent against the Iranians. We have a crazy week for gold. However, I think a pullback is basically in place. We are this jump that you see in gold is on the back of news that's been going on and uncertainty, and the fact that the market is a little bit freaked out about what could potentially happen in the Middle East. But hopefully, if there is no war going on and there's nothing serious anymore, I think gold will probably pull back down. First to stop would be 2,200 point. I do not see gold basically breaking the 2,000 point anytime soon, guys. We have a solid support line at 2,036 to, let's say, $2,000 point. So having said that, and on that note, we're going to go into the weekend, and we're going to be waiting for the numbers to be published next week and monitor and see how the markets will perform. Like I said before, if you've been trading S&P 500, Dow Jones, or NASDAQ, it's time for you to take profit and be out watching the market, potentially going to the market next week. I'll be here and I will analyze the charts further. Thank you very much and have a great weekend, everyone. Bye.